Bitcoin ETFs are exploding in popularity, and it's even making some of the seasoned investors really start to take notice. And in just a matter of months, BlackRock's iShares ETF have pulled in billions and billions of dollars, surpassing market expectations, but more importantly, even outperforming some of their traditional ETFs like the gold ETF. What's also interesting is that the ETFs have actually made it much more easier for the average person to actually participate in Bitcoin. So if you're asking yourself, how can you take advantage of this opportunity? Well, this video is for you because I'm going to be covering all of that and more in this video. I'm also going to be sharing the top 3 Bitcoin ETFs that I would recommend that you should consider getting for your portfolio. So let's dive right into it. Bitcoin ETFs have surged to over 90 billion in assets, with major players like BlackRock, Fidelity, really leading the charge. But why all of a sudden this huge interest in Bitcoin? Well, it all began in January 2024 when the SEC approved the first wave of Bitcoin ETFs. And what this did, it created a massive shift in how investors can access Bitcoin. In the past, if you wanted to purchase Bitcoin, you'd have to navigate this different crypto exchanges. But now with Bitcoin ETFs, it makes it easier for everyday investors. So think of people with retirement accounts like an IRA or 401k to then gain exposure to Bitcoin, but without the hassle of direct crypto purchases. What the F is an ETF? I have a video that really dives deeper into it, but I'll just kind of like cover the high level here. Well, an ETF is an exchange traded fund, and it's a type of investment fund that holds a collection of assets. So think of bonds, stocks, or in this case, Bitcoin. And typically an ETF holds a diversified collection of assets. And the whole point is so that you gain immediate diversification by just buying one share in this fund that gives you the diversification of having, let's say, 500 different stocks. You might be wondering, why even bother with an ETF when you can just buy Bitcoin directly? Well, the answer lies largely in regulation and accessibility. But here's where Bitcoin ETFs are a little bit different. They're single asset ETFs. So when you invest in a Bitcoin ETF, you're essentially buying shares that tracks Bitcoin's value without having to directly buy or manage Bitcoin. Now, to help you navigate and compare these different Bitcoin ETFs, I've created an Excel sheet where you can really just go through the details, and you can download it anytime by just going to the link in the description. Here are the 3 things that I believe you need to consider when you're evaluating which Bitcoin ETF to invest in. Now, the first one is expense ratio. The expense ratio, it reflects the annual fees you have to pay as a percentage of your investment. The lower the expense ratio, it means that more money gets to stay in your account that stays invested. As you can see, I've outlined some of the ETFs here, and they have different expense ratios. So let's just start off the top. Grayscale Bitcoin Mini Trust has a 0.15% expense ratio, and that's the lowest expense ratio right now in the market. As you go down the list, you see the Franklin Templeton EZBC 0.19, the ARK 21 shares Bitcoin ETF 0.21, and then you have a bunch of ETFs like IBIT, FBTC, which is the Fidelity ETF, at 0.25. So all of those different ones are at 0.25. The Hashdex Bitcoin ETF DEFI 0.90, which is quite high. And then you have the Grayscale Bitcoin Trust, which is different than the Mini Trust, at 1.50. Now, if I'm looking to invest, I'm looking obviously at the expense ratio as a factor. So GBTC will probably not be the one that I'll be looking to invest unless if they offer something unique that outweighs this high expense ratio. But if they don't, I wouldn't be touching that because that's just too high of an expense ratio, especially given that the average expense ratio is around 0.20. The thing you want to consider after the expense ratio is you want to look at the fund size. And sometimes it's referred to as assets under management, AUM. And this is an important thing to look at because it gives you insight as to the ETF stability and popularity. The larger the ETF, the easier it is to attract more investors, which makes it more liquid. And the reason why you want an asset that has liquidity, it means that the trading volume on that ETF is high, meaning that when you're ready to sell, it's easy for you to get a buyer. And more importantly, you'd find that the bid to ask spreads are going to be tight, meaning that you'd find it relatively easy to sell your asset. So here's the iShares Bitcoin Trust ETF, IBIT. And this is the one that's managed by BlackRock. Now, if you look at the net assets of the fund, right, the assets under management, like I said, on November 14th, they had over $40 billion. So the fund was over $40 billion, which is quite big. And another interesting thing is that if you look at the 30-day average volume, and what this basically means is that on average per day, what's the trading volume on this ETF? You can see that over 50 billion transactions in terms of the daily volume. So this is quite strong. It's a popular ETF, and you can clearly see that a lot of investors are trading it. And you can even see that it started January 5th, 2024. It has quite a lot of shares outstanding, 826 million shares, and it has a very, very low bid to ask spread, meaning that generally buyers and sellers agree on the price of the ETF. So when it comes time for you to sell, it's very, very easy for you to sell it, and it maintains its value because it has a lot of interest from investors. So that's one thing you should consider. The smaller ETFs, you're going to find that their trading volume is going to be low, and there's going to be a huge bid to ask spread. And what that basically means is that if you own the ETF, you're now trying to sell it, buyers will be willing to offer you a much, much lower price than what you would be willing to sell profitably. So that's another thing you want to consider as well. Number one, you want to look into the expense ratio. Number two, you want to make sure you look into the fund size, because the larger funds tend to have more liquidity. And then the third thing is you want to make sure you look into the custodianship. How are they storing the Bitcoin? What security measures do they have in place? And you want to make sure that you're working with a Bitcoin ETF that's trustworthy, because it increases consumer confidence. But more importantly, it will mean that the actual assets themselves are kept safe and secure, and you don't have to worry about cybersecurity risk. Now, why do Bitcoin ETFs have different prices? Well, the answer to this question really lies into a few factors. I'm going to dive into those factors right now, but it's really centered around how each ETF is structured and managed. So the first important factor is what are the outstanding shares and the Bitcoin holdings that the ETF has. So we were looking at iShares a little while ago, and they have over $40 billion in assets, and they have hundreds of millions of shares that are out in the marketplace. So naturally, they have a lower price per share compared to a smaller fund that might have fewer outstanding shares. Now, the other thing that also drives the price is one of the things we just mentioned earlier, which was custodianship. If investors feel that the way you're storing the assets is not good, it adds a level of risk that will also reflect in the price. But if investors are confident in how you're storing the Bitcoin, it's also going to reflect in the price in a positive way. And then the third thing that will also affect price is the expense ratios and fees. Again, something I touched on earlier that you need to consider when you're purchasing, but the fees charged by each fund, they do play a role in the overall price, because expense ratios actually affect the total return that you make over time. So the lower the fee, it makes it more appealing to investors, meaning that it might actually then boost the price up. Now, let's get to the fun part. So the top three that I think you should consider looking into: number one is iShares Bitcoin Trust, IBIT. It's managed by BlackRock, and BlackRock is the world's largest asset manager, right? And they offer low fees, secure custodianship, and they're really solid choice both for retail and institutional investors. And when you look into their inflows, they've been receiving massive inflows, billions and billions of dollars into the ETF, meaning that it's super liquid. It makes it easy when you want to buy and also when you want to sell. And also, BlackRock has a strong reputation as a really good asset manager. So it's really one of the standout ETFs in the market. The second one is the Fidelity Wise Origin Bitcoin Fund, FBTC. And this is also another one that's ideal for cost-conscious, security-conscious investors because they have this proprietary in-house custodial storage system for their Bitcoin, which adds an extra layer of security. And then the third one is the ARK 21 shares Bitcoin ETF, ARKB, and it's spearheaded by Kathy Wood, and it's very innovative, and they also have a very different approach when it comes to the crypto industry. While it doesn't really quite match in terms of scale to iShares and Fidelity, it also still does offer competitive fees, and they prioritize transparency when it comes to their custodianship, making it an excellent choice for investors who are looking for a really good mix of growth and potential security. Now, I'm going to jump into the charts, and we're going to look into how these three ETFs are currently priced, and it will just also give you additional insight as to which one you'd like to go with. So let's dive right in. Okay, so we're going to start off with IBIT, and you can see with IBIT, it closed on November 15th at $52, and it has solid volume, 46 million. So it's a really good option. And let's take a look at the year-to-date growth. Year-to-date growth is 86%. So solid growth throughout the year. Now, the next one is Fidelity Wise, which is the FBTC, and it closed the day at $80. So a little bit more expensive. You can see that the trading volume is much lower than IBIT. Its year-to-date growth is 90%, so really solid growth from Fidelity. And then the last one is ARK, and ARK is actually the most expensive of the three at $91.50, much lower trading volume, and its year-to-date growth is 83%. So still solid growth there. Now, if you're considering investing in Bitcoin ETFs, there's no better time than now, because I feel that the opportunity is even just getting started, and given the new administration, the political landscape shifts and a lot of the economic uncertainty, I think there could be potential upside when it comes to Bitcoin ETFs. Remember that there's the Excel sheet that I have put together that compares all the different Bitcoin ETFs that you can download as a free resource, so you can actually use that in your evaluation. Finally, if you found this video helpful, please like and subscribe to the channel. It helps me, it helps the channel grow. And also, more importantly, feel free to let me know in the comments what other content you'd like for me to bring out. And if you have any questions about Bitcoin ETFs, please let me know in the comments as well, because I actually do read the comments. So looking forward to seeing you guys in the next video.